Hey there, thanks for tuning in. Welcome to Investing in Germany. And today it's time for the weekly market update. The biggest news coming in from the market is the spectacular collapse of the bank, Silicon Valley Bank in the America. So this is one of the biggest bank collapsing in the America since 2008 financial crisis, and that speaks its volume. It's not only a biggest news in the America, but this is the biggest news all over the world. So as you know, if the America they catch cold, the whole world catches fever. So that is how America is dominant in the financial sector and also in the complete economic. This is really big news. If you just Google SVB in the German Google, you can see that almost all the market related news is coming in from the market or about SVB. Everybody are really jittery about it and what's happening, and whether this is going to create a ripple effect or a spiral where there are going to be a lot of bankruptcies coming in the next months because of the high interest rate environment. So let's wait and watch. Let's start with the stock price here. So SVB Financial Group, which is the parent company of the Silicon Valley Bank or the SVB Bank, it lost its value by like 60% in a couple of trading sessions. It fell so fast that even the regulators stopped allowing the people to trade in the SVB Financial Group because it was really going crazy, like in 2 sessions 60%, and if the regulators have left it, maybe it is gone to zero because everybody want to come out of the stock because this is going to be a spectacular collapse of this bank, right? It's not only SVB Financial Group which lost its value, even the index, the Nasdaq Bank Index, which tracks many banks in the America, has also collapsed like crazy, 20%, something like that. And this speaks that almost all the investors are really jittery about the banking sector, not only in the America, but also in the European Union. SVB Bank is a really crazy bank because they are really focusing on those companies which are not making money, which are backed by the venture capitalists. That's why you see the Peter Thiel, one of the biggest venture capitalists, also coming into the market and saying what the government should do and so on. And Peter Thiel also recommended that his companies where he has invested to take out the money from the SVB Bank because the issue here was really staggering. And we also have the biggest investor coming in from the England, the Bill Ackman, is also recommending what could be done, what should be done, and so on. So this speaks volume because SVB Bank is a really important bank for the technology industry. So you have to really understand what the SVB Bank does actually. So the SVB Bank, they cater only towards or mostly towards those venture capital funded companies which are not making any profit and which are just burning cash like there is no tomorrow. And they are really money burning companies. So SVB Bank was focusing only on those clients, which means that they are really focusing on the venture capitalist money coming into the market. So in the last decade or so, there was a really low interest rate environment. Therefore, the venture capitalists had a lot of liquidity and they were throwing the money at almost all the technology sectors. And therefore, there was a lot of liquidity in the market. And SVB, they wanted to get all those money into their deposits, and then they can make money by buying a long-term government bond or invest in government-backed securities or asset-backed securities and so on. So that is the business model. They were really focusing on those venture capital funds. What happened here is that in the last year, around July, when Jerome Powell came out and started increasing interest rate like really crazy steps, like 0.75 steps and so on, and this really created a lot of issue within the venture capitalist industry because they were not able to get the free money which they can throw at the companies. Therefore, those companies which were really relying on the venture capitalists to fund their daily operations, they were out of money. And therefore, they tapped into the deposits, what they have deposited in the SVB Bank. Since, as you know, the SVB Bank is now only focusing on those technology companies, and the money is not available for any of the technology companies. So all the companies were started to use up the deposits from the last years and so on. What it really means for SVB is that they have to pay back those money to the depositors. And therefore, they had to really sell all those assets. And since the interest rate was going up, and the value of those government-backed securities and funds are going down. And therefore, in this week, we had SVB Financial Company, which was a starting point of this collapse, sold about 21 billion of assets at a loss of $1.8 billion, which is almost 20% loss. That's a really staggering amount. And not only there, they also propose to dilute the shares, like they want to print shares, like Federal Bank were printing money, and the companies can print shares and then sell it at a premium value and then to get some funding there. So They proposed also to dilute their shareholders to sell the share and raise 2.25 billion, which was not really taken light in the market, and that's why the market started to fall down. Everybody wanted to get out of the stock because they saw something is foul here. So that is one of the reasons why the SVB Financial Bank really collapsed, because they are not able to fund the depositors. Now the bank is taken over by the Federal Deposit Insurance Corporations, which is nothing but the government agency, which will now take and decide what to do with those assets and what to do. As you know, just like in Germany or European Union, all our cashes or our deposits up to 100,000 euros are insured. In America, it is done by the Federal Deposit Insurance Corporation, which insures about $250,000 of cash lying in the bank. And for this bank, most of the clients are coming from the companies or the firms which has more than $250,000. Almost 90% of their clients have more than $250,000 deposited in the bank, which now brings a big question mark what happens to those monies, because it is not there and they will not get all the money what they have deposited. So that is one of the reasons why here Bill Ackman, for example, is recommending the government to take over the company and insure all the depositors, and then not to burn down the technology industry there. And this is one of the reasons why Peter Thiel or even Bill Ackman is really pushing the government or recommending the government to take over the company, dilute the shares, and make sure that the depositors are not now hit with a loss of deposits, right? Because you also need to understand why they are doing. So they are also venture capitalists, which means that they are also invested in the companies which have deposits in the bank. And of course, they don't want to lose their money here. They don't want their company to go into bankrupt because of this issue. And that is the reason why they are really vocal about this. They are not speaking for their depositors. They are speaking for their money, which is laying in the bank. So be careful over there. When you really hear something like this coming into the news, you should really dig deep a bit more. And the ripple effect, you can also see what happened here in the European index, bank index, which is also came down like 10%. And I believe it will again come down a bit more. And I think we will also see some similar actions coming in the European Union or even in Germany, but we don't know yet. One could also argue that the SVB is a peculiar story because they were really betting against the inflation, betting against the Fed and so on, but not all the big banks are doing like that, right? For example, JP Morgan or Morgan Stanley, they have a really big diversified client base. Therefore, even the technology companies, they are taking the money out. They have different sources of income and different sources of depositors there. I think this is similar also to the German banks, but then there are also several banks which are catering only to small companies or investment companies. So those banks will be either acquired or even go bust. So this is quite an alarming factor. So be careful when you are investing in the bank stocks in the coming years or so. There will be a lot of volatility in the market, and therefore you have to be really careful there. So coming back to the economical data, so we had the unemployment data coming in from the America, which is going in the right direction. So the unemployment went up from 3.4% in Jan to 3.6%. So that is a really good news for the Fed. The US jobless claims rose for the 2 months. So it's really good to see. As you can see that the most of the jobless claims is coming from the California and New York. So California, as you know, all the technology companies are starting to lay off, like Meta platform, Alphabet, Amazon, Microsoft, and so on. So that is more or less clear. And what's happening with the New York, right? So you should also dig deeper a bit there. So New York is a capital city for the capital markets. In the last couple of months, there have been a lot of restructuring going on in the asset management companies because now at the high interest rate environment, they don't have much customers with a lot of money. All the customers are gone into the government-backed securities, which is quite giving them a really good handsome returns. And therefore, they're already started. So therefore, the asset management companies are already started to lay off and also become lean. And you can see that is one of the reasons here. The New York is also having high jobless claims here. Even though the unemployment data was going in the right direction for the Fed, the job creation data is not that of a great news for them. If you see here, the hospitality segment has created 83,000 jobs, which means that the people are starting to spend more money. People are traveling a lot and so on, which is not a really good sign because this really increases the inflation rate coming from the service sector, and that will create a lot of spiral in the economy. And another important factor you can see here is also that the manufacturing job creation is at 43,000 jobs, which means that the economy is picking up. They are producing a lot of products, which means that it will create an inflation. So this is not a good news. At least let's see what the Fed is going to do and how they are going to do. But I think the 25 basis point increase in interest rate in the America is given, and 50 basis point increase in the European Union is also given. Even the economists around the Germany or around the European Union, they are forecasting that the Fed will peak its interest rate at 3.75%. Beyond that, it will create a lot of tension in Spain, Greece, Italy, and so on. I think they will stop at 3.75%. At least that is what the economists are predicting. And at the same time, they will start doing the quantitative tightening at a really high pace so that they reduce the liquidity. So they're going to go ahead with the liquidity side to reduce the inflation. So this is something for us to wait and watch. And finally, the flow trade is one of my biggest bet. You can see here what's happening in the last couple of days when the SVB bank collapsed. So once the bank collapsed, which means that the volatility increases, so everybody wants to come out of the banking sector or a bank index or something like that. And you can see flow traders doing really well because flow trader is like a hedge. If the market goes down, the flow traders goes up because that is how the market works. That is how their business model works. So this is a really good bet. I think you can check if it really fits you. And evaluating flow traders is something quite difficult. Sit tight, enjoy the ride. See you in the next video.